The SPY and the QQQs seem to have some complex head and shoulder patterns on their 4-hour time frames. And the VIX looks to be headed for a full measured move of this descending triangle pattern. Welcome back, everybody, to High Quality Trades, the channel where I provide top-notch technical analysis on the stock market, where we go over simple support and resistance levels, trendline breaks, and pattern formations. And I give you the price targets of where price is headed in the coming days. So let's get into it. In today's video, we will be going over the most significant support and resistance levels on the SPY, the QQQs, and the VIX, and what you should be looking for if these levels are tagged in the coming days. So first up, we have the SPY on the 4-hour time frame. Today, October 3rd, the SPY closed at 567.82. It reached a high of 569.80 and a low of 565.49. We were negative 0.18% on the day. Alright guys, so what is the SPY currently doing? So it looks to me like this is some kind of advanced head and shoulders pattern. If we are to just focus in on something like this, with the neckline being the previous resistance level here at 565.23, this could ultimately be a head and shoulders topping pattern that would signal for the SPY to possibly fall lower in the upcoming days. So if we were to just take the measured move by draping a trend line from the top of the head down to the neckline, say we were to break below 565.23 tomorrow, then this pattern is ultimately signaling for the SPY to fall down to 555.38. Now this is not for certain. This is just hypothetical at the current moment based on my technical analysis. But I am leaning more bearish at the current moment. If we pull up the MACD on the daily time frame, the MACD is starting to curl over. We have not gotten a bearish cross yet, but if the SPY does not make a bullish move soon, it does look like the MACD will curl over and head back down towards the zero line, which would be bearish for the market. Now if we go back into the 4-hour time frame and just go over our support and resistance levels, the SPY is below its resistance level here of 568.91. If the SPY cannot get above this level, if the buyers cannot get above this level, then it's most likely that we break below our support level here of 565.23, and then we head down to our ascending trend line of our ascending triangle pattern. Most likely we're headed down to 561.04, which would be the next support level. But if the SPY does manage to get above this 568.91 level, then we can go try to attack our resistance level here at 572.94. And if we're able to get above this level, then the SPY could try to break the all-time high of 575. That would be the bullish scenario. But alright guys, that's it for this SPY. Now let's head on to the triple Qs. So the triple Qs looks like another head and shoulders topping pattern here on the 4-hour. If we were to just map out both shoulders and the head, which I'll do for you guys right now. The triple Qs definitely has a cleaner looking head and shoulders pattern, I'd say. But we have left shoulder, head, right shoulder. Now, if we were to take the measured move of this possible head and shoulders looking pattern by draping the trend line from the top of the head down to the neckline, moving over to where the possible breakout area could be if, say, we break below it tomorrow. This measured move is signaling for the triple Qs to fall down to 462.91. This is not for certain. This is just based on the current price action. The triple Qs would first have to break below the neckline here of 478.30 for this to be a possible measured move. And so let's look at our daily MACD as well. So we have not yet made a bearish cross on the MACD, but it is starting to curl over. So if we don't get some bullish price action in the coming days, then it is most likely for this MACD to curl over to make a bearish cross and head back down to the zero line, which would be bearish for the triple Qs to head lower. So let's go back into the 4-hour time frame and just go over the support and resistance levels for the upcoming days. So right now we're below our resistance level here of 484.64. If the triple Qs cannot get above this level, then we will be headed down below our support level here at 478.30. The triple Qs has not yet managed to fill its up gap right here beneath us at 476.02. So if we do break below this 478 level, it's most likely we go and try to fill this gap. And if this gap does not hold as support for the buyers and we turn around and head back up, say we fall through this level, then 470.81 would be our next support level. We do have our ascending trend line from our pennant pattern here on the 4-hour time frame. If we were to fall below the 470 level, we could find support at this ascending trend line. So that's the bearish scenario. Now let's go over a bullish one. If the buyers manage to get above this 484.64 level, then we will head up towards 490. And if we're able to break above this level, then we can go finish filling our gap up here at 495.22. All right, that's it for the triple Qs. Let's head on to the VIX. So the VIX has formed a descending triangle pattern over the last month. With the price action we got early this week, it looks like we have broken out of this pattern and we are now headed up to 23.30 if we are to just get a full measured move of this descending triangle pattern. Actually, a full measured move looks like it takes us up to 2465. But I believe this is what is most likely based on the descending triangle pattern breakout. So look for the VIX to continue pushing higher, and if it does, this will in turn push the market lower. So now let's go over the support and resistance levels. So currently the VIX is above its support level at 1939. It looks like it's headed up to fill its gap at 2198. If the VIX manages to get above the 2198 level, then it will head up towards that full measured move of this descending triangle pattern. That would be the bullish scenario for the VIX. Now let's go over the bearish one. So if the VIX falls below 1939, then we will head down towards 1722. And if this level was to break, then the next support level is down here at 1537. Alrighty guys, these are the support and resistance levels for the upcoming days. So make sure you watch out and pay attention to these levels and trade accordingly. And with that, that will be the end of this video. Thanks for watching High Quality Trades. I'll see you in the next video.